If we look at the UK, there's a subject of job vacancies to discuss here as well, Martin, because Conservative members of Parliament will today choose the final shortlist of 2 candidates to succeed Theresa May as UK Prime Minister, as we know. And in the third round, announced yesterday evening, Boris Johnson stretched his lead to 89 votes. His tally of 143 lawmakers was as much as the remaining 3 candidates' combined votes. And after today, the party's 160,000 members will have about a month to decide between the remaining pair. You're short the pound. Is this a structural short? Is it a short-term short?
We're structurally short the pound because I've called it before the word stability. There is no stability in the UK today. Economically, we have underperformance. Financially, the housing market is in trouble. And politically, we still have significant political instability. So those 3 instability legs is the reason why we expect the pound to continue to decline. And we will need to see much more than just who is the leader of the Tory party to change that assessment.
OK. Also, when we've been talking about inflation, I mean, what's interesting with inflation expectations is we've talked about the US, we've talked about Europe, how they've really been collapsing. But the UK is somewhat of an outlier when you look at sort of inflation expectations. What does that mean for the Bank of England today? Not necessarily in terms of the decision, but in terms of guidance and what we might see beyond today.
I think it's slightly difficult, but significant factors about why the inflation level is a little bit higher in the UK has to do with the currency, has to do with commodity prices. The UK is a very, very open economy, so the domestic drivers of inflation, we have wage growth, but we don't have housing growth. Prices at the same level. They've decelerated a lot. So there's a mixed picture on the inflation outlook, but a large, central banks love the word transitory, a large part of the inflation level we have in the UK are transitory factors, which could well fall out in the next 12 to 18 months. So it's a very difficult decision for the Bank of England, but we have said that the rate hikes they've implemented in the last 2 years were potential mistakes. And I would be very surprised if the Bank of England wants to push the view that they're hawkish. This would be a mistake.